Welcome back to Talk Tickers, where we do deep dives on earnings calls, to give you the insights you need. We're looking at Jumia Technologies Q4 2024 earnings call today. They call them the Amazon of Africa, but what really stands out to me is how they're dealing with these serious economic problems across the entire continent. So what are your first thoughts on this?
Yeah, it is a pretty fascinating situation. It's like, on one hand, you have these macro issues impacting all of Africa, but then on the other hand, you see Jumia making, some serious moves to improve operationally. I mean, they're getting leaner, they're smarter, more laser focused, they're figuring out what works.
It's almost like they're building a house in a hurricane, right?
Yeah.
Trying to get a solid foundation down while the wind's whipping around them.
Exactly, yeah. And it's not just about survival, right? They're actually seeing real momentum. Look at their orders, for example. If you take out the markets that they left last year, South Africa and Tunisia, their orders went up a pretty solid 18% compared to last year, same time.
That's impressive, especially when you think about how they actually spent less on marketing. Looks like they're getting way more efficient at bringing in customers. Their Black Friday event was huge, wasn't it?
Oh, absolutely. They crushed it during Black Friday, and that tells me that they're becoming, the place to go for shoppers during those really busy shopping times. And don't forget, they're not just sitting in the big cities, right? Yeah. They're making this big push into what they're calling upcountry markets, basically expanding into these rural areas that haven't really been tapped into yet.
Doesn't that sound like a logistical nightmare, though? I mean, delivering to all these places that are out in the middle of nowhere?
Oh, it's definitely a challenge. But they're putting together this really impressive logistics network, and that's, a massive advantage over anybody else who's trying to compete but can't actually reach those areas. And they're also getting strategic about where they get their products. Over 3.4 million items came straight from China just in Q4.
Wow. So they're going global to find the best prices and the biggest selection for their customers.
Exactly. And it's not all about growth. They're tightening up their operations, right? Yeah. They've consolidated their warehouses, they've streamlined processes, and they've even started using chatbots to handle the basic customer questions.
That's smart. It's all about doing more with less these days, isn't it?
It is, and you can see it paying off. They're actually seeing a positive gross profit, even after you factor in the cost of fulfilling those orders. So basically, their core business model, it's working.
Okay, so their core business is showing some good signs. But what about, their overall financials?
Well, their revenue did take a hit, mostly because of reduced corporate sales, which seems to be, kind of a cyclical trend. And then, of course, you've got those pesky currency fluctuations to factor in. And this is but their gross profit after fulfillment cost was positive. So that means, for each sale, they're making money even after they get the product to the customer.
That's a key detail. It shows that their business model at its core is actually sound.
Mm-hmm.
But are they profitable overall?
Not yet. But they're projecting some pretty ambitious, but I think achievable targets for 2025, something like 15-20% growth in orders. And they're looking at a 33-28% reduction in losses.
Okay, those are big goals. But based on what they did this quarter, it's not totally out of reach. Were there any other interesting details that stood out to you?
Yeah, I thought their approach to reaching those remote customers is really interesting. Remember those old Sears catalogs?
Yeah.
Jumia is going old school. They're using basically paper catalogs to reach customers in areas that don't have, good internet access.
That's brilliant, going back to basics, but in a really innovative way.
Yeah.
Shows you how they're really thinking outside the box. What about their J-Force program? That's been a big part of how they've grown, right?
Absolutely. Their J-Force, which is basically a network of local sales agents, grew by a huge 39%. It's like having a local rep in every community spreading the word about Jumia. Really smart way to tap into that, that word of mouth network.
Sounds like they're firing on all cylinders. But let's be real for a sec. There are still some challenges ahead.
Of course.
Yeah.
The economic situation in Africa, it's still unpredictable. They'll need to, navigate those uncertainties very carefully.
But they're scrappy, right? They've shown they could adapt and find a way to grow.
Exactly. This is not about just surviving. They're actively innovating and building a foundation for the long term.
Okay, so we've talked about the highlights, the challenges, the overall trends, but what about like the actual numbers? I know they went through, a lot of detailed metrics during the call.
Right. Yeah, they did. They went deep into the financials. And, while that top line revenue might look a little concerning at first, you got to consider some nuances there.
Okay, so let's break down those numbers a bit. What should our listeners be paying close attention to?
Well, one thing that really jumped out was the impact of those reduced corporate sales, especially in Egypt. Remember, they had a surge in corporate sales back in 2023, with those big purchases from local and regional distributors. But that trend seems to have kind of reversed itself this year.
So is that a sign that the market's weakening?
Not necessarily. Not necessarily. It seems more like it's a cyclical thing. Corporate buyers are probably being a bit more cautious because of, the overall economic concerns. And maybe they're adjusting their buying cycles. You know how it goes.
Right. So it's a reminder that even in a market like Africa, where there's so much growth, you're still going to have those ups and downs.
Exactly. It's important to, look past those big headline numbers and see what's happening with their core business, what they call their marketplace revenue. That was down 31% year over year in Q4. But
There's always a but, right?
right. When you factor in the currency fluctuations, it was actually only down 11%.
So those exchange rates are really making a big difference.
Big time. And the same goes for their gross profit. Overall, it was down 36% year over year.
Okay, I'm sensing another but here.
You got it. Remember how we were talking about how their gross profit after fulfillment costs was positive? That's a really important metric because it shows that, at its core, their business model is actually working.
So they're making money on each order, even after you account for, what it costs to get that product to the customer.
Exactly. And that's a crucial indicator of whether or not they're going to be sustainable over the long term.
Okay, so despite some of those, top line revenue challenges, their core business model is actually showing some signs of strength. But what about their expenses? I mean, are they managing those effectively?
Oh, absolutely. They've been incredibly focused on cutting costs and boosting efficiency. And you can see the results, right? Their fulfillment expense per order, if you take out the Jumia Pay app orders, dropped to $2.24. That's a 4% decrease year over year.
So they're getting better at getting those products to customers without, spending a fortune. How are they doing that?
Well, they've been consolidating those warehouses, making things run smoother, and they've even implemented some automation in their call centers.
Smart moves. Every penny counts, especially in a tough economy like this. What about their marketing expenses?
They've been really smart there too. Their sales and advertising expenses as a percentage of their GMV went down by 36 basis points year over year. Basically, they're finding more efficient ways to reach their customers.
Okay, so they're getting more efficient with their operations. They're smarter with their marketing. Sounds like they're really trying to position themselves for long-term success.
Exactly. This earnings call really paints a picture of a company that's facing these challenges head on and making real progress, even with all the headwinds they're dealing with.
All right, so we've covered a lot of ground here. Their order growth, their expansion into new markets, their efforts to become more efficient. But what's the key takeaway for our listeners? What should they be thinking about after hearing all of this?
I think the biggest takeaway is that Jumia is a company that's, it's showing real resilience. They're not just surviving in a tough environment. They're actively growing, they're innovating, and they're setting themselves up for success down the road.
They're proving they can adapt to the unique challenges of the African market, and that's pretty exciting. But before we wrap up this part of our deep dive, let's get into their guidance for 2025. What are they projecting for the year ahead?
Well, they're setting some ambitious goals, but it's not just, pie in the sky stuff. They're projecting a 15 to 20% increase in those physical goods orders.
Okay. So they're expecting to keep that growth going. What about their profitability? Are they expecting to turn a profit in 2025?
Not quite, but they are forecasting a big reduction in their losses. They're aiming to bring their loss before income tax down by 33 to 28%, which, those are bold targets, but
They've surprised us before, right?
yeah, exactly. Remember, they set out to, achieve positive gross profit after fulfillment costs last year, and they did it.
So they have a track record of exceeding expectations.
They do. Their guidance for 2025 shows that they're confident in their strategy, their team, and the potential of the African e-commerce market.
All right, so they're ambitious, they're executing, and they're seeing some positive results. Sounds like Jumia is definitely a company to keep an eye on. But we're just getting started with this deep dive.
Stay tuned for part 2, where we'll dig deeper into Jumia's financials and uncover some less obvious but equally important metrics. We'll also take a closer look at their balance sheet, their cash flow, and their overall liquidity.
And we'll explore some of those intriguing details that came up during the earnings call. Plus, we'll unpack Jumia's growth strategy and discuss, the key risks and challenges that they're facing.
We'll also examine those broader trends shaping the African e-commerce landscape and consider what they mean for Jumia's future.
And of course, we'll wrap things up with our signature "This is not financial advice" segment, where we'll pitch an outrageous but plausible trade idea that just might make you think twice about Jumia's potential.
So buckle up, listeners. We're just getting started with this deep dive into the world of Jumia technologies. We'll be back soon with part 2.
Welcome back to Talk Tickers. In part 1, we kind of, skim the surface of Jumia's Q4 2024 earnings call, and now it's time to really roll up our sleeves and dig a bit deeper into some of the the less obvious but equally important aspects of how they're doing financially.
You're right. We did kind of just skim the surface, but there's always more to the story. So what specific areas should we be focusing on?
Well, one area that I think often gets overlooked is how Jumia, how they manage their treasury activities. Particularly what's called cash repatriation.
Right, cash repatriation. For those of us who aren't finance wizards, can you break that down for us? Sure. So imagine Jumia has operations in multiple African countries, right? They're generating cash in each of those markets. And cash repatriation is basically the process of moving that cash from those different countries back to their headquarters.
Ah, okay. So why is that such a big deal?
Well, moving money across borders, especially in a region as complex as Africa, it comes with costs. And these costs aren't always reflected in the adjusted EBITDA, which is, a common metric that a lot of investors look at.
So you're saying that relying solely on adjusted EBITDA might not give you the full picture?
Exactly.
Yeah.
Jumia, they emphasize looking at loss before incur tax from continuing operations. And this metric, it gives you a more complete view of their financial health because it includes those repatriation costs.
It's kind of like, looking beyond the sticker price of a car and factoring in things like insurance and maintenance, right?
Yeah.
You need the whole picture to understand what it really costs.
Yeah, that's a great analogy. For example, in Q4 2023, Jumia's overall loss was significantly impacted by these financial costs that were related to cash repatriation because they had those high corporate sales.
But then in Q4 2024, they had lower corporate sales, meaning less need to move that cash around and therefore lower financial costs.
Precisely. And while the adjusted EBITDA doesn't fully capture this, this positive change, the loss before income tax metric does, which paints a much clearer picture of their progress towards profitability.
So it's a more accurate reflection of their actual financial position, giving investors a better sense of how they're managing their money.
Exactly. Now let's talk about their balance sheet and cash flow. One thing that kind of jumps out right away is their strong liquidity position. They ended 2024 with $133.9 million in liquidity.
Okay, hold on a second. Liquidity, what does that actually mean in plain English?
Well, in simple terms, liquidity refers to how easily a company can access cash to meet its short-term obligations. So in Jumia's case, this includes their cash on hand, any cash equivalents, term deposits, and other financial assets that they can, quickly convert to cash.
Got it. So having $133.9 million in liquidity is a good thing, right?
Very good. It gives them flexibility to invest in future growth, to weather any unexpected storms, and it basically gives them a cushion in uncertain times.
That's reassuring, especially given the the volatile economic environment that they're operating in. Now, they did mention a significant working capital impact in Q4. Can you shed some light on that?
Absolutely. Jumia made a strategic decision to increase their working capital, specifically to to expand their supplier base and to secure more goods at competitive prices.
So they're basically investing in their inventory to make sure they have enough products to meet that growing demand that we're talking about earlier.
Exactly. It's all part of their long-term plan to offer customers a wider variety of products at better prices.
Makes sense. Now, switching gears a bit, let's look at their outlook for 2025. From what I gather, they seem pretty optimistic about the year ahead.
Oh, they are. They are. They're projecting a 15 to 20% increase in physical goods orders, which is pretty impressive considering those macroeconomic challenges we discussed.
That's a strong vote of confidence in their own growth. And what about their bottom line? Are they expecting to significantly reduce those losses?
That's definitely the goal. Yeah, they're targeting a 33 to 28% reduction in losses before income tax, which is a big swing in the right direction.
Ambitious, but again, they've exceeded expectations in the past. They seem to have a knack for hitting their targets.
Exactly. Their track record combined with their detailed plans makes me think that those targets are definitely within reach.
Now, beyond the numbers, what other interesting details emerged from the call? Anything that particularly caught your attention?
Oh, absolutely. Absolutely. Remember how we talked about them, pushing into those underserved upcountry markets? Well, they mentioned using something quite old school to reach customers in those areas. Paper catalogs.
Wait, paper catalogs, like the ones Sears used to send out in the age of smartphones and the internet.
You got it. It might seem counterintuitive, but remember, a lot of those rural areas don't have, reliable internet access. Jumia is adapting and finding creative ways to reach customers wherever they are.
That's brilliant. It's a great example of how they're like blending those old school tactics with a modern approach. It shows they're really thinking outside the box.
Exactly. Another fascinating detail was their use of chatbots to handle those basic customer inquiries.
That's a trend we're seeing across a lot of industries these days, using AI to streamline customer service.
Right. It's a win-win. It helps them manage costs by automating those routine tasks, and it frees up their human customer service agents to focus on the more complex issues that require a personal touch.
So they're improving efficiency and potentially even customer satisfaction at the same time.
Precisely. And finally, their focus on international sourcing really stood out. They're not just relying on local suppliers. They're tapping into global markets to offer a wider variety of products.
They mentioned sourcing millions of items from China in Q4. So that sounds like they're taking advantage of globalization to benefit both their business and their customers.
Exactly. It allows them to offer more competitive prices, to cater to diverse preferences, and ultimately to enhance that customer experience.
Okay, so we've talked about their financial health, some interesting operational details, and their optimistic outlook for 2025. But let's be realistic. Every business faces risks. What are some potential challenges that they might encounter down the road?
You're absolutely right. No business operates in a vacuum. One of the biggest risks for Jumia is, of course, the macroeconomic environment in Africa. It's a volatile region, with its share of political instability, currency fluctuations, and potential economic downturns.
Those are factors that are largely outside of their control, but they can definitely impact their operations.
Yeah.
What other risks should investors be aware of?
Well, competition is another one. The African e-commerce market is attracting more and more players, both local and international, all vying for a piece of the pie. Jumia needs to stay ahead of the curve, constantly innovating and differentiating itself to maintain its competitive edge.
It's a dynamic market, that's for sure.
And then there's the infrastructure challenge. Many parts of Africa still lack reliable internet access, consistent electricity, and well-developed transportation networks. And these logistical hurdles can impact Jumia's efficiency and its ability to really reach its full potential.
Those are definitely real concerns. But having said that, Jumia has proven time and again that they're adaptable and resourceful.
They have a deep understanding of the local markets, a strong team, and a proven business model. They've been operating in Africa for over a decade, weathering many storms along the way.
So they've demonstrated resilience and a knack for overcoming challenges.
Exactly. Now, before we move on to the next part of our deep dive, let's switch gears and talk about Jumia's overall growth strategy. They've been very vocal about their ambitions to to become the dominant e-commerce player in Africa.
Okay, so let's unpack their strategy. What are they doing to achieve that ambitious goal?
Well, they're taking a multi-pronged approach. One key element is expanding their reach. They're not just content serving, major cities. They're actively pushing into those underserved rural areas, those upcountry markets we discussed earlier.
Right. That makes sense. Those areas represent a huge untapped market with a lot of growth potential.
Exactly. And they're not just, setting up shop. They're investing in the infrastructure that's needed to make e-commerce viable in those regions. They're building warehouses, they're partnering with local logistics providers, and they're developing innovative delivery solutions.
So they're really laying the groundwork for long-term success in those markets.
Absolutely. Another critical piece of their strategy is their focus on offering, a wide selection of products at competitive prices. They understand that selection and value are crucial for attracting and retaining customers.
We talked about their international sourcing efforts, and it seems like they're constantly working to negotiate better prices with their suppliers.
Right. They're constantly refining their sourcing strategies to make sure they can offer those competitive prices. And beyond selection and price, they're also prioritizing the customer experience.
Because happy customers are repeat customers.
Exactly. They're investing in technology to improve their website and their mobile app, and they're always looking for ways to make the shopping experience more seamless and enjoyable.
They also mentioned building a strong customer service team, which is essential for resolving any issues and building trust.
Oh, absolutely. Customer service is a key differentiator in e-commerce, especially in a market like Africa, where where building that trust is so important. And of course, none of this would be possible without a robust logistics network.
It all comes down to getting those products to the customer's doorstep, efficiently and reliably.
Right. They're investing in their own fleet of vehicles, partnering with third-party logistics providers, and developing innovative solutions like those pickup stations to overcome the logistical challenges in Africa.
It sounds like they're pulling out all the stops to build a really solid foundation for their logistics operations.
They are. And on top of all of that, they're also focused on building a strong brand. They want Jumia to be synonymous with e-commerce in Africa.
They're investing in marketing and advertising to raise awareness, and they're actively engaging with customers through social media and other channels.
Right. It's about building a community around the brand and positioning themselves as the go-to platform for both buyers and sellers.
They're attracting top talent, they're creating a culture of innovation, and they're really embracing technology to drive their growth.
It sounds like they're ticking all the boxes for a successful e-commerce business.
They are. They're promoting financial inclusion, working to make financial services more accessible across Africa, and they're also committed to sustainability, implementing environmentally and socially responsible practices.
So they're not just focused on profits. They're trying to have a positive impact on the communities they serve. It's an impressive roadmap for growth.
It is. Now let's step back for a moment and consider the broader implications of Jumia's growth. What does their success mean for Africa? What does it mean for the global e-commerce landscape?
Those are big questions. Why don't you lead us through your thoughts?
Well, to me, Jumia's success really highlights the potential of the African continent. Africa is often overlooked, but it's one of the fastest growing economies in the world. With a young and expanding population and increasing internet penetration, Africa's on the cusp of an e-commerce boom.
And Jumia is in a prime position to capitalize on that trend.
Exactly. Their success also, it challenges that traditional retail model. It shows that e-commerce can be a viable alternative to brick and mortar stores, even in developing countries. This is particularly relevant in Africa, where traditional retail infrastructure is often limited.
Jumia is making it possible for people in remote areas to access a wider variety of goods and services without having to travel long distances. It's a game changer for consumers, and it's opening up opportunities for entrepreneurs and businesses.
Absolutely. Jumia's growth is also having a ripple effect on the broader African economy. They're creating jobs, they're supporting local businesses, and they're encouraging innovation.
They're bringing more businesses online. They're helping to formalize the informal sector, and they're making the African economy more transparent, more efficient, and more competitive.
And they're doing it in a way that prioritizes sustainability and social responsibility.
Okay, so we've covered a lot of ground in this part of our deep dive. We've analyzed Jumia's financials. We've explored their operational details. We've unpacked their growth strategy, and we've even pondered the broader implications of their success.
We've also identified some key risks and challenges that they face. But before we wrap up this part, let's go back to our initial question.
Mhm.
What stands out to us about Jumia? What makes them a company worth watching?
For me, it's their resilience. They've encountered so many obstacles, but they consistently find ways to overcome them. They're like that tenacious vine, pushing through the jungle, adapting to the terrain, and ultimately finding a path to sunlight.
I agree. Their ability to adapt and thrive in a challenging environment is truly remarkable. And I'm also impressed by their long-term vision.
Yeah.
They're not just focused on short-term profits. They're building a company for the long haul, investing in the future of e-commerce in Africa.
They're planting seeds that'll bear fruit for years to come.
Exactly. And finally, I admire their commitment to Africa. They genuinely believe in the continent's potential, and they're investing in its future. They're not just extracting value. They're creating value and doing it in a way that benefits everyone involved.
So what does the future hold for Jumia? What should investors be watching for in the coming months and years?
That's the million-dollar question, isn't it?
Yep.
The road ahead will undoubtedly have its bumps, but I believe they have the right team, the right strategy, and the right mindset to succeed.
They're definitely a company worth keeping on your radar. But before we move on to the final part of our deep dive, we need to have a little fun.
You're talking about our signature. This is not financial advice segment, right?
Yeah.
Where we let our imaginations run wild and come up with an outrageous but plausible trade idea.
Exactly. Okay, so get this. What if Jumia leverages its growing logistics network to launch a drone delivery service across Africa?
Drone delivery in Africa. That's a bold idea. What makes you think it could work?
Well, think about it. Africa has vast expanses of land, often with limited road infrastructure. Drones could overcome those logistical hurdles and deliver goods to remote areas that are currently inaccessible by traditional means.
It'd be like Amazon's Prime Air, but on a whole new level.
Exactly. Imagine a swarm of drones, zipping across the African savanna, delivering everything from medicine and electronics to fresh produce, bypassing those challenging road conditions.
It would be revolutionary for e-commerce in Africa, opening up a whole world of possibilities.
It would also create, new opportunities for businesses and entrepreneurs, allowing them to reach customers they could never reach before.
Of course, there are challenges to consider.
Mm-hmm.
Regulations, safety concerns, the cost of the technology, and ensuring reliable drone operation in such diverse environments.
Absolutely. There are hurdles to overcome, but remember, Jumia has a history of innovation. They've consistently found creative solutions to logistical challenges. I wouldn't be surprised if they're already exploring the potential of drone delivery.
It would be a bold move, but it could be a brilliant one.
It's definitely something to ponder. But for now, let's get back to reality and wrap up.
Okay.
Wrap up part 2 of our Jumia deep dive.
Right. We've covered a lot of ground, but there's still more to explore.
In part 3, we'll examine Jumia's focus on efficiency, analyzing how they're optimizing their operations to improve profitability. We'll also discuss those broader trends shaping the African e-commerce landscape and what they mean for Jumia's future.
And of course, we'll provide our final takeaways and some closing thoughts for investors who are considering, Jumia as a potential investment.
So stay tuned for the final installment of our Jumia deep dive. We'll be back soon with part 3.
Welcome back to Talk Tickers for the final part of our Jumia deep dive. We've gone over their financials, their growth strategy, all those big trends shaping the African e-commerce landscape. But one thing that really sticks out to me is Jumia's intense focus on efficiency. It's like their mantra is do more with less.
Yeah, absolutely. I mean, they're laser focused on getting the most out of every single part of their operations, and it's definitely showing in the results. Like, look at their warehouse consolidation, for example. By streamlining their warehouse footprint, they've cut costs significantly and really boosted their overall efficiency.
Yeah, it's like decluttering a house, right? You get rid of all the stuff you don't need, and suddenly everything just runs a lot smoother. What other ways are they pushing this whole efficiency thing?
Well, they've got some pretty smart automation in their call centers now. They're using chatbots to handle those basic customer questions that come up all the time. It's a trend that's popping up everywhere these days, and it's a smart move.
It frees up the human agents to deal with the more complicated stuff, which could even lead to happier customers. Yeah. And they're also getting more bang for their buck with their marketing, right?
Right. They're not just, throwing money at ads. It's strategic. They're looking at the data, seeing which channels are working best, and then putting their resources where they'll make the biggest difference. It's all about, maximizing that ROI.
Like a smart shopper who compares prices and hunts for deals, right? making every dollar count. Okay, so we've talked about Jumia's efforts to, boost their own efficiency. But let's zoom out a bit. What about those bigger trends, those forces shaping the African e-commerce landscape?
Yeah.
Jumia is not operating in a vacuum, right?
No, definitely not. They're part of this really dynamic and rapidly evolving ecosystem. And one of the most significant trends is Africa's, it's young and it's growing population. I mean, it's a huge potential market for e-commerce, and it's only going to get bigger.
It's like this demographic wave, sweeping across the continent, and Jumia is right there, ready to ride it. What other trends are fueling this e-commerce boom?
Well, internet penetration in Africa it's skyrocketing, and that's thanks to more smartphones and the expansion of mobile networks. More and more people are getting online, which opens up a ton of possibilities for e-commerce.
It's like a digital gold rush,
yeah.
and Jumia is staking its claim. What else is driving this growth?
Well, the African middle class is expanding too, and that means more purchasing power and a growing demand for all kinds of consumer goods. People have, more disposable income, and they're looking for convenient and affordable ways to shop.
And e-commerce, it ticks all those boxes. It's accessible, it's convenient, and it offers us a huge variety of products at really competitive prices.
Exactly. And on top of all those consumer trends, you also have this surge in entrepreneurial spirit across Africa. People are, starting businesses, creating jobs, and driving, real economic growth.
And Jumia is playing a key role in supporting this whole entrepreneurial ecosystem. They're giving, small businesses a platform to reach a wider audience, and they're offering, tools and resources to help them succeed.
Absolutely, they're empowering those small businesses to really thrive in this new digital marketplace. And then you can't forget the growing awareness of sustainability in Africa. Consumers are becoming more conscious of where they spend their money, and they want to support businesses that operate in a way that's good for the environment and for society.
And Jumia seems to be taking this trend seriously, right? They're implementing sustainable practices across their operations, and they're working with suppliers who share those same values.
Yeah, it's a smart move, both from a business standpoint and from a social impact perspective.
Right. All of these trends together they paint a pretty optimistic picture for the future of African e-commerce.
It's a dynamic, it's an exciting market, and Jumia, it really seems to be leading the charge in this whole transformation.
Okay, so we've really gone deep in this deep dive. We've analyzed Jumia's financials, we've looked at their innovative strategies, and we've unpacked all those big trends that are shaping their future. But as we wrap up, what are your key takeaways? What do you really want our listeners to remember about Jumia Technologies?
I think for me, it's their unwavering commitment to navigating the really unique challenges of the African market. They're not just surviving; they're thriving, they're adapting, they're innovating at every turn.
They're proving they can not only weather the storm, but come out stronger and more resilient on the other side.
Exactly. They're executing a clear strategy. They're making smart improvements to their operations, and they're showing they really understand their target market.
It's a pretty inspiring story, entrepreneurial spirit, strategic execution, and a real commitment to making a difference in Africa. But as with any investment, there are risks, right?
Absolutely. Investors need to really think carefully about those macroeconomic challenges, the competitive landscape, and those infrastructure hurdles we talked about.
Right. But for those who really believe in the long-term potential of African e-commerce, Jumia is definitely a company worth watching closely.
And remember, this is not financial advice. Do your own research, talk to a financial advisor, and make informed decisions based on your own personal situation.
That's it for our deep dive into Jumia Technologies. We hope you found this analysis useful and informative. We'll be back soon with another episode of Talk Tickers, where we'll keep breaking down earnings calls and giving you the insights you need to navigate the world of investing.